Welcome back, Focus Learners. Okay, let's dive right into this. If you've ever just sat there looking at your bank account, kind of wondering what your next strategic move should be, well, you are in the perfect place. Today, we're unpacking a really foundational concept that honestly dictates the trajectory of your entire financial future. We're talking about wealth foundations, and specifically that absolutely crucial balance between saving and investing.
So, save or invest? What actually comes first? It's literally the classic beginner's dilemma. Picture this. You're just starting out, you have a limited amount of money to work with, and boom, you are immediately hit with this massive wave of pressure, right? Everyone online is telling you that you need to start investing as early as humanly possible to build wealth. But at the exact same time, there's the totally undeniable necessity of having a safety net. When you only have so many dollars to allocate every month, what genuinely takes priority? Do you save it for security, or do you invest it for growth?
To really wrap our heads around this, think of it as the ultimate matchup. In one corner, you've got security today. Picture a heavy, impenetrable steel vault packed with cash. That's your savings. It's grounded, it's immovable, it is absolute security for right now. And in the other corner, you have growth tomorrow. Picture a vibrant green plant breaking right through the coins, trending upward. That's investing. Dynamic, lively, and focused on the future. So we're looking at two completely different tools, designed for two completely different jobs.
To make all of this crystal clear, here is our roadmap for this explainer. 1. The great money dilemma. 2. Saving, which is security for today. 3. Investing, our growth for tomorrow. 4. When to prioritize saving. 5. When to prioritize investing. And finally, 6. The balanced financial approach. Let's get to it.
Starting off with Section 1, the great money dilemma, navigating conflicting financial advice.
And this brilliantly illustrates the root of all that confusion we feel. Look at the core stats of our heavyweights side by side. Saving is defined by two things: low risk and easy access. Your money is just there whenever you need it. Investing, on the other hand, is defined by long-term growth, but it comes with a major catch: volatility. You're fundamentally trading away that easy, risk-free access for the potential of future expansion. It's basically the difference between locking your money in a fortress where it stays exactly the same versus planting it in the soil where it might weather a few storms but could eventually grow into a massive orchard.
Let's slow things down just a bit and move into Section 2, saving, security for today, and building your anchor. Before you can build a towering skyscraper, you need a deep, totally immovable foundation, right? Well, the most critical form of saving is the emergency fund. By definition, this means keeping your money somewhere completely safe and easily accessible for short-term needs or unexpected emergencies. But why is that low-risk part so important? Actually, think of it this way. It is your financial shield. If a crisis hits, let's say, heaven forbid, you lose your job, you cannot afford to wait 4 days for funds to settle after selling off assets. And you definitely can't afford for your shield to shrunk by 20% just because the stock market had a bad week. You need instant liquid access to the exact dollar amount you put in. That pure liquidity, that is your ultimate peace of mind.
All right, let's pick the pace back up and shift focus to Section 3, investing, growth for tomorrow, or what I like to call the momentum engine.
If saving is your heavy anchor keeping you safe in a storm, investing is the powerful engine that actually drives you forward to your destination. Investing is, at its core, asset growth. It's putting your money into assets that have the potential to increase in value over time. But you have to acknowledge a crucial caveat. Values can, and absolutely will, go up and down. That's the fundamental trade-off. Market growth is dynamic. It's volatile. However, the whole strategy relies on having a long-term horizon. When you zoom out over years or even decades, that general upward trajectory aims to outpace those short-term dips, really compounding your wealth. You aren't stressing about what happens next Tuesday. You're focusing on where your wealth is going to be 10, 20, or 30 years down the line.
So the crucial point is knowing exactly when to deploy which strategy. Moving to Section 4, when to prioritize saving and establishing your baseline. Because knowing the textbook definitions is one thing, but knowing what to actually do with your paycheck on Friday is another. You must prioritize saving and build your foundation first if you have no emergency fund, if you might need the cash soon, or if you're just working on getting stable first. Let's paint a really realistic scenario here. Imagine an unexpected major car repair pops up, a couple $1,000s, easy. If you skipped building your savings and dumped all your cash into investments, you might be forced to sell those investments at a massive loss just to fix your car. Establishing your baseline of stability first protects you from being forced out of the market. It keeps a minor hiccup from turning into a major financial disaster.
But once that shield is fully built, your whole strategy transforms. Welcome to Section 5, when to prioritize investing, reaching cruising altitude.
This is where you really start accelerating. Investing makes the absolute most sense when you can confidently check off a few boxes. First, you already have that basic safety net in place. Second, your mindset is fully shifted to the long term. And third, you have the ability to stay consistent over time. You see, the true magic of investing isn't usually just dropping a one-time lump sum and forgetting it. It's the incredible momentum generated by consistent monthly contributions over decades. But here's the secret. You can only maintain that unbroken consistency if you aren't constantly raiding your brokerage accounts to pay for sudden emergencies. When your savings protect your foundation, your investments are free to compound completely uninterrupted.
And that brings us to a really powerful realization in Section 6, the balanced financial approach, finding the ultimate synergy.
Now, what's really interesting about this approach is that we started this explainer by framing this as a versus match, save or invest. But the ultimate secret to financial health, you don't always have to choose just one path, especially once you're out of the absolute beginner phase. You can split your resources. A balanced approach means allocating a portion of your funds, say a clean 50% split, toward fortifying your security today through savings, while the other half goes straight toward fueling your future growth through investments. It is a tag team working together. You're actively buying yourself peace of mind today, while simultaneously building real financial freedom for your future self. Let's move to and see how this builds into one final cohesive strategy. Protect yourself today and grow your money over time. Understanding how these two distinct mechanisms complement each other is really the key to mastering your money. You need the shield of savings to survive the present and the seed of investing to thrive in the future. They aren't enemies at all, they are indispensable partners in your overall financial journey.
Before we wrap up today, a quick but very necessary reminder. This explainer is strictly for educational purposes and does not constitute financial advice. Personal finance is, well, it's deeply personal. Always conduct your own research and make decisions that are tailored to your unique financial situation and your personal risk tolerance.
If this explainer helped clarify your next steps, make sure to hit subscribe to SmartSense Lab for more structured, no-nonsense money content. I want to leave you with one final question to chew on today. Based on where your bank account is sitting right at this very moment, will you build your shield or will you plant your seed today? Take action, stay focused, and I will see you all in the next one.